Apart from macroeconomic data, market sentiment is highly sensitive to the news on the bank crisis driving up in the United States. Earlier this week, market participants regained their risk-on mood. For this reason, the US dollar briefly advanced across the board. However, in the next session, speculators pushed the green back to previous lows, given priority to the information on the updates in monetary policy by major central banks. What other statistics will be able to influence market sentiment in the last 2 days of the trading week? Let's discuss it in the regular traders calendar on InstaForex TV channel. Financial analysts have been speculating for a long time on a recession threat that might hit the top global economy, the United States. And you are certainly aware that a technical recession is acknowledged when negative GDP is recorded for 2 quarters in a row. From a Thursday, developed economies are due to provide preliminary GDP data for the first quarter of 2023, and the US is the first to report on its national economic output. The forecast is optimistic with no hints about a recession. The US GDP is expected to expand by 2% in the January-March quarter, following a 2.6% increase in the fourth quarter of 2022. This information will improve market sentiment, and the US dollar is likely to lose favor with the investors as a safe haven asset. Investors will be poised to allocate their funds to risky assets, for example, the US stock market. Besides, the data on economic growth is advanced in advanced economies. The Bank of Japan's policy meeting will be also a high-impact event. Apparently, the central bank will hardly update its ultra-loose monetary policy. Importantly, it will be the first meeting chaired by the new governor, Katsuo Ueda. The Bank of Japan is the only central bank to refrain from lifting interest rates in the effort to bring inflation down. Meanwhile, consumer inflation has already eased to 3.2% on year. To sum up, the wait-and-see approach has proven efficient, and the regulator is going to pursue accommodative monetary policy until price stability is ensured. During the European session, market participants will absorb a batch of flash GDP data on the Eurozone's major economies, Germany, France, Spain, and Italy. But let's try to figure out the common trends expected for the whole Eurozone. The European Union economy looked stagnation in the fourth quarter of 2023. It means that it was zero growth. The European economy perked up in the first quarter this year, and analysts project a minor 0.2% increase. In other words, a recession threat has not come true yet. It's a welcome news for investors. Moreover, the ECB will have enough leverage to go ahead with its crusade against inflation by raising interest rates. And high inflation remains a thorny issue nowadays. Preliminary Germany's inflation data for April will highlight the problem. Analysts predicted just 0.1% downtick in the annual inflation rate from a 7.4 to 7.3%. It means that it's too early for the ECB to loosen its grip on a monetary tightening, hence more rate hikes will follow. Recently, Isabel Schnabel, member of the ECB Executive Board, signaled that the regulator is ready to raise interest rates by 50 basis points at the next policy meeting. And her remarks, complemented by red-hot inflation data, will assure traders to buy the euro. On a Friday, traders will get to know a report of crucial importance that will allow them to evaluate the prospects of the US economic conditions. Consumer spending serves as an accurate barometer. Analysts warn of a negative dynamic that could be a precursor of a looming recession. Indeed, consumer spending accounts for almost two-thirds of the US GDP. Nevertheless, a decline in consumer activity is not mirrored in the GDP report. Something raises doubts that the US Statistics Agency provides accurate information. How we're going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to the channel and follow news with us. See you soon.